There is a theory that some big investors are talking about, but not too loudly. The theory is that we are in the beginning stages of a change in the money system of the world. The global monetary system is what they call it. It is going through this change right now. Not a crash, not an overnight collapse, but a slow shift. The United States dollar has been the currency for the world's financial system for a very long time. People around the world use the United States dollar to buy and sell oil. The United States dollar was also used to settle trades between countries. Countries would save up a lot of United States dollars, then use them to buy United States Treasury bonds and invest in American financial markets. This system made things very stable for the United States dollar and the American financial markets. It also created a big problem because some countries had a lot more United States dollars than they needed. This is something that's really hard to say. The truth is, there is something that people do not want to hear, and that is what I am going to tell you. The truth is uncomfortable. The modern dollar is not backed by gold. The modern dollar is not backed by silver either. The modern dollar is actually backed by debt. Every dollar that you can spend is actually a debt that someone else has to pay. This debt is usually connected to the United States Treasury. Long as people all around the world wanted to buy these United States Treasury debts, everything was fine. The dollar was very valuable. The United States could buy things from other countries than it sold to them. People in the United States could buy things than they made themselves. The markets where people buy and sell stocks and other financial things just kept going up and up. Things that are built on confidence will eventually get to a point where they cannot handle the pressure anymore. This is what happens when systems rely much on confidence. Systems built on confidence have to deal with a lot of strain. They will reach a point where they just cannot take it anymore. Systems built on confidence are going to reach a stress point. Today, the thing that causes us stress is not the same as it was 20 years ago. The stress point has changed over time. 20 years ago, people were worried about things. Now the stress point is something. Central banks over the world are buying a lot of gold. This is a deal. Countries are trying out ways to settle trade with each other using their own money. They are also making systems for paying each other that do not use the usual banks in Western countries. Central banks and countries are doing this to have control over gold and trade. No one is going to get rid of the dollar all of a sudden. This would hurt their money that they have stored away. So what they are doing is, they are spreading their money around to types of currency. The dollar is still important. When people start doing this, it is like a quiet warning that the dollar is not as strong as it used to be. People are starting to wonder if the dollar is still the currency to use. Diversification of currency is what they are doing. This is often the first sign that people are starting to question if the dollar is still the dominant currency. The United States is dealing with a problem. It has a lot of debt that just keeps getting bigger. The United States has to pay to service this debt. That becomes a really big issue when interest rates change. When the dollar is strong, the United States can buy things from countries for less money, which is good. At the same time, it makes it harder for the United States to sell things to other countries, because the United States exports are not as competitive. If the dollar is weak, it can actually help the United States with its debt problem, and the United States can make things at home. The United States also has to be careful because a weak dollar can cause prices to go up, which is called inflation, and that is not good for the United States. That tension is visible everywhere. The stock market goes up and down a lot. The prices of things like oil and food change really fast. Gold and silver prices jump around too. Bitcoin is weird because sometimes it is a bet and sometimes it is a big risk. It just depends on the week. The ups and downs are not just happening for no reason. This is what happens when people who buy and sell things are trying to figure out what will happen next. They are not really sure. Some investors think that the money saved from ways of doing things, especially from artificial intelligence and automation, could make up for the problems we are facing. If new ideas and technology come out enough, the economy could grow faster than prices rise. This is what some people hope will happen. But even in that best-case outcome, the road between here and there may not be smooth. Money changes take a time. We are talking about years. Sometimes it is decades. The time it takes to get used to these money changes is usually not easy. Monetary transitions are like that. They take a lot of time, and the period of adjustment for transitions is rarely comfortable. There's also a political layer. The dollar is strong or weak because of interest rates. The Federal Reserve changes these rates when they think about inflation and how many people have jobs. People in politics usually want interest rates because that helps the country grow. When people in politics do not agree on what to do about interest rates, everyone gets upset. Even when we are not seeing it on the news or hearing about it in interviews, the real reasons for these decisions are still there, and interest rates are still important. If people around the world start to lose an interest in treasuries, the United States will not have many options. The United States can raise the interest rates on treasuries to make them more attractive to buyers. Or the United States can accept higher inflation. Higher inflation would help reduce the value of the debt that the United States owes. This is a problem for the United States because the United States has a lot of debt. Neither option is painless. That is why some analysts think that what we are seeing is not really chaos, it is management. Some analysts believe that what is happening is actually management of the situation, not chaos. The analysts think that management is really what is going on, not chaos. We are seeing a change from a world that is controlled by one powerful country and the United States dollar. This change is moving towards a world where many countries have power, and this power is spread out across regions. The world is becoming more multipolar, which means that power is not just in one place, it is distributed regionally. This is a controlled shift from the system to a new multipolar system. In a world like this, the dollar is still around. It just does not have all the power. The dollar shares its influence with things. The dollar is not the one in charge anymore, it has to share. Big companies that manage a lot of money, like the ones that work with countries and governments that have a lot of cash, are already doing business in many different areas. They work with kinds of money, goods, and markets. The global capital companies do not just focus on one thing. They are able to change and adapt. When things are not stable, it can actually be a thing for global capital companies that have a lot of money to spend and do business all over the world. Global capital companies can take advantage of these situations. For the person, the change is not the same. The average citizen does not see it in the way. The transition feels different for the citizen. Inflation is a problem because it affects the purchasing power of our money. When the currency is weak, it becomes very expensive to buy things from countries. This is what we call imports. Asset inflation is also bad because it makes the rich people even richer and the poor people even poorer. It widens inequality. Inflation and currency problems create a lot of uncertainty. This uncertainty increases anxiety for people like us who are worried about our future and our money. That is why gold often acts like a warning signal. When people start to doubt the value of money and stocks, they begin to look at gold and other real things that have value. Gold is not necessarily saying that everything will fall apart. It is a way to protect yourself from the big problems that might happen with money. The question is not whether the dollar collapses tomorrow. There is evidence that the dollar will do this. Reserve currencies, like the dollar, do not fall apart all of a sudden. They lose their power slowly over time. The British pound is an example of this. The British pound did not disappear overnight. It slowly lost its dominance over decades. The dollar is a reserve currency, and reserve currencies like the dollar fade away gradually, not in a way. What is really important is the direction you are heading in. The direction is what matters the most. If the world keeps on making its reserves more diverse, creating ways to make payments and doing trade without using the dollar system, even if it is just a little bit, that means the system is really changing. The world is making its reserves more diverse and creating payment systems, and that is a big deal for the dollar system. The dollar system is what lots of countries use to do trade. If the world starts to use other systems, even if it is just modestly, that signals a big change. The world is changing the way it does trade. That is a structural evolution for the dollar system and the way countries do business. Structural changes. They reshape markets. These changes are big. They affect markets in many ways. Structural evolutions are always taking place. They continue to reshape markets. If the dollar is not as strong, it can help the United States sell things to other countries. This can make trade fairer. The United States will not owe much money to other countries. A weaker dollar also means that things might cost more for a long time, especially when it comes to buying a house or stocks in companies, like real estate and equities, and also the United States dollar, and the real estate and the equities. That is the trade-off that policymakers have to deal with. Policymakers are always trying to find a balance. That is the trade-off. The trade-off is something that policymakers must navigate when they are making decisions about the trade-off. Some people think that a lot of what we see in public, the fights between politicians, the interviews, the news headlines, is like a show. It is possible that these things are a distraction from the real changes that are being made behind the scenes. Whether or not that is true, one thing is certain. Major monetary shifts are rarely accidental. Things happen because of incentives, pressure points, and gradual policy changes that are made over time. Policy changes are one thing that can make things unfold. Incentives and pressure points are also important when it comes to these policy changes and how they make things unfold. Productivity breakthroughs can make things easier. Innovation can help create a growth cycle that makes the change more stable. The path to the future is not always easy, and for people who are not ready, there can be times when things are not stable. Productivity breakthroughs and innovation are important for a transition to the future. If we look at the past, we can see that the way money works usually changes every 20 to 40 years or so. The United States dollar has been the currency for about 50 years now since the country stopped using the gold standard. This does not mean that things will definitely change. It does seem to fit with the way things have happened in the past, with the dollar-centric order. The United States dollar may stay the currency that countries around the world use for a long time. The dollar is really important. People think it will keep being the world's primary reserve currency for years to come. The dollar is what most countries use when they do business with each other. But exclusivity is different from dominance. And dominance is different from permanence. This is not the end of something. What we are seeing now is probably just the beginning of something new. It is not really an ending, it is something that is going to keep going on. What we are likely witnessing is not an ending. This is a rebalancing of things. The system is going through a rebalancing. We are talking about a rebalancing, a redistribution of financial gravity. The people who gain the most during these times are usually not the ones who speak the loudest. These people are the ones who see what is coming on, make changes little by little, and do not take things to an extreme. They are the ones who really benefit from the change, the people who gain the most. When we are going through transitions, it does not help to panic. Transitions are tough. We need to be calm. Transitions do not get better when we panic. We have to be strong during transitions. Transitions are a part of life, and panic will not make transitions easier. Rewards are given to people who have awareness. The people who are aware get these rewards. Awareness is what they reward. This moment is going to be remembered as something. It might be a change, or it might be the start of a big change in how money works. One thing is for sure. The monetary system, like the system we have now, is going to be affected by this moment, the monetary system. The world's financial architecture is no longer static. The thing is moving. Quietly. Slowly. But undeniably. Don't forget to subscribe my channel. See you soon. Bye-bye.